Hi, this is Joseph. It's Sunday. It's October 11th. We're going to do a quick review on the larger time frames. I'm going to start off here with this is the dollar yen. This is a 4-hour chart. Again, this is a larger time frame. So please keep in mind that what's going to take place or what may happen may not necessarily happen on Monday. It might develop and unfold over the course of the next 2 to 3 days. So again, this is a 4-hour chart. Pretty interesting level where price stopped on Friday, and then this is the open. So the market is open for trading right now. It is Sunday. The markets are open. There was a pretty strong move here to about the 80 level, and then it dropped right back down to 65. We're going to take a look at the daily time frame. So you'll notice that there's a couple of key levels of resistance, and it appears that price continues to find resistance right around those ranges that could take a couple of days, maybe even another week. So while it looked like it was going to bounce off of that trend line on the 4-hour chart, if we look at it here on the daily time frame, we get sort of a different story here. Now, it is possible Friday's candle was a bearish engulfing candle. You can see it right there. It is possible that Monday could be a bullish retracement. So this level right here, just underneath the 106 level, I want to be paying attention to that because I want to see how Monday and Tuesday, where this candle, those daily candles close in relation to that resistance level. So that might give us some sense of direction. If it retests and then starts to drop back down again, that might be a clue, and it may give me an opportunity to trade it once that retracement, the bullish retracement, is over with. If it is, again, another retest of resistance and then it starts to come back down, that might solidify a move a little bit lower, and then I would be looking, of course, at the point and figure chart for an entry. So let's go to the daily time frames here. I'm going to click on daily time frames. We'll take a look at the euro dollar. So the euro dollar, this is the daily chart, euro dollar. The daily chart here in the euro dollar, this resistance level right up here, that's from July 31st. So if you remember trading with me all through July, we had that rally. And at the end of July, going into August with non-farm payrolls, we were talking about the possibility of watching price start to fill out and start to move sideways, creating a range of consolidation. So there was sort of a selling climax here at this point. You can see it right there. Again, that is July 31st, and that creates an area of resistance. So each one of these little upthrusts here, they're moving a little bit further than the previous one. But again, if we track volume levels with futures, we can see that it's starting to diminish, and that's what gave us an opportunity to start looking for trades in the opposite direction once we got into September. So again, August was sort of sideways consolidation. We expected that at the end of July. And then we needed to get more information and some kind of a clear signal with an opportunity to start selling it. And that didn't really happen until the end of August and then through September. So now at this point, we've moved back inside of that previous range of consolidation. And I want to be paying attention to this level right here. Again, that's the July 31st level. The July 31st candle. That high is the 119.08 level. You might have a slightly different number. Of course, this is the FXCM data. But again, I think it may come back up and retest that level. Now, I'm not saying it's going to stop there, and as soon as it hits that level, we need to immediately sell it. But if it starts to track higher towards that July 31st resistance level, but it holds, and then it starts to turn around on the smaller time frames on that particular day, I'm probably going to get a signal to sell it with, again, a relatively decent opportunity to expect a new downtrend after that retest, because I still think that this is likely to hold. In other words, it could provide a really good opportunity. This would be a pretty deep retracement, but it doesn't necessarily mean that this move to the downside, and probably even taking out the low over here from the March 9th. We talked about this a couple of times over the last few months. The March 9th high, it could have provided some kind of a support when it was dropping through here in September, but it stopped. Well, if it comes back up again and it holds right around that 1900 level, this is 1908, if it holds right around that level and then we get a solid reversal, obviously I'm going to be timing my entries on a 30-minute or 1-hour chart using the point and figure, and it's probably going to come down with a lot of force. There's that possibility. So I'm going to be looking for clues. This is just a possibility. I wouldn't bet on it just yet. It still hasn't reached that level of resistance. I don't know what it looks like yet because we still haven't approached that level and then worked around a couple of days where it would create some kind of a reversal signal candle pattern reversal to the downside. So again, what I'm trying to make sure that you understand is that I'm not trying to call any particular trade. I'm not saying that it's going to go back up to the 1900 at this point and it's an opportunity to buy. And I'm not saying that it's an opportunity to sell it because it hasn't reached any significant level that would give me a better trade, meaning where I could minimize the stop and then really clearly identify just exactly what's going on here. To see some kind of a retracement like this after a signal to sell is not uncommon, and it wouldn't offset the trade to the downside if it comes back up here and retests that level. We see that happen quite a bit with retests or retracements. Sometimes they're deep retests and then they come down with a lot of force. So it's just something that I'm thinking about is a possibility at this point. Again, right now I'm not calling a sell and I'm not saying to buy. Obviously the market is open and we're looking at a bearish retracement. Like I said, with the dollar yen, it could be that Monday would be the retracement days, meaning that, let's say, for example, with this one, I'll go ahead and open it up a couple of clicks. Monday could be a bearish retracement, and it may stop right around the 1800 level or maybe just a little bit lower. I'm going to be watching to see how it reacts, maybe the 50% length of the Friday candle, something to that effect. It may bounce and turn around and continue, let's say, as we approach the New York session on Monday, or it just may float around and just kind of move around sideways and just hold right there and then maybe pick up more momentum on Tuesday or Wednesday. There's just a couple of different possibilities. I don't know until the London and the New York session starts. Right now what it looks like is that we would see some kind of a bearish retracement, and then as we approach the London or the New York session on Monday, it might go positive and take out the high from Friday and keep moving higher. That's just a couple of different possibilities. Right now at this point I would wait. I don't think it's at a significant location where I would consider and would start trying to execute some kind of a trade, like a buy or a sell right now at this point. So I'm going to wait until I get more confirmation there. Let's take a look at the pound dollar. This is the pound dollar. So the pound dollar popped back up right above that resistance that we were talking about last week. That high is the 1.3 thousand level, or 3006. That candle did close above that resistance on Friday. But again, we're still trading in this range right here. So I want to be paying attention to the depth of the retracement. And then there's also this old uptrend line here. So if I tighten it back up again, you can see where it started. This goes all the way back from that drop through the month of March. And as it continued back up, so it may find a little bit of resistance once it approaches the bottom side of this uptrend line. That's just one possibility. Now, I wouldn't expect it necessarily to stop precisely at that trend line. It may go a little bit higher. It may go a lot higher. And then ultimately, at the end of the day, it may close right back down underneath that uptrend line. Just a couple of different possibilities. I want to be watching to see exactly how this plays out. And then again, paying attention to the 50% retracement on that move from the, this goes, sorry about that. This goes from the September 1st to the low September 11th. That's where it bottomed out right there and formed that B low. Again, another retest. Just kind of, it almost looked like a spring right here, pushing right back through. But again, it's going to run into a serious level of resistance in here. And I'm thinking maybe Monday or Tuesday. So let's be watching this one closely. This one I want to be really careful with. It could provide a pretty good opportunity to find some really good trades. In the past few weeks, there's been several on the pound dollar on an intraday basis. So it may ultimately give us that kind of an opportunity this week or next week. Last week was a little bit slower, but I think that we're going to start seeing some better moves over the next week or two. And then things could get pretty volatile as we get closer to the presidential election here in the United States. So something to keep in mind. It's just going to be an intraday noise, that kind of thing. I don't think it's really going to, we'll know when it has some kind of an impact and it reaches some kind of level of resistance or support, depending on which currency pair we're looking at. We'll know how the market's going to react to the news on the election. So that is just about it. I'm not really going to focus so much here on the dollar Swiss right now. You can see it's right back at that level of support. It's still inside of that range of consolidation. Very similar, just in the opposite direction of what I see here on the euro dollar. So again, all of my trades are going to be executed on the 30-minute or the 1-hour chart. I do use the point and figure. I get that question quite a bit. What is it that I use to actually figure out my entry points? I use the point and figure charts, so they'll look something like this for those of you who aren't too familiar with it. So this is the primary page where I find all of my trades to execute on an intraday basis. So again, I'm using the 1 hour time frame here on the top. You can see it's a bar chart for each one of the currency pairs that I'm trading. And then I use point and figure to time my entries on each one of these trades. So I will stop here, and I will send out the next update at approximately this time tomorrow.